It is good news. It's a very subtle change, but it's still in the right direction, as you might say. In terms of going, maybe just getting a bit of background, going from where we've come from, back in 2022, we reached highs of over 11% of inflation, so staggering. And we've been coming down quite gradually. So we are very pleased where we are now. It's still above what we call the Bank of England target of 2%. But I think our forecasts are it's unlikely to get there anytime soon. I think it's obviously positive for the consumer on the street. It should mean that the cost of living crisis is perhaps quite not so so felt as it perhaps was. We're also likely to see, on the back of low inflation, the Bank of England allowing itself to ease interest rates. That will obviously be positive for mortgage owners or for property owners, because their mortgages will eventually come down when that gets repriced by their mortgage companies or banks, and may even be reflected eventually in the cost of rent for the rental market as well. So it's all positive news in the right direction. Back in August, we had a change of government in the UK. It's still early days. That may well be relevant for us locally and in the UK in terms of inflation and where we go on interest rates. The new Labour government was voted in on a strong mandate, and that mandate was for change and was for growth. And generally, when there is a growth agenda, then the government has talked about using funds and the government spending to accelerate infrastructure building out, other spending, which can have inflationary kind of consequences. So that's why I said at the start that probably, seeing inflation levels at 2.4%, that sounds quite good right now. We may not get much better than that. On the interest rate side, we do expect the Bank of England to continue easing rates, partly on the back of the fact that inflation has come down quite nicely now. So we're expecting interest rates to get to 1% lower than where they are now. So they're 4.75% now. We're expecting them to drop by 1% by the end of this year, and then get to around 3% by the end of 2026. So it's a decent move down. It's certainly, obviously, far cry from where we were shortly after the financial crisis, but I think no one's expecting us to get back to those lows again. So yeah, I think if we get to the 3.5% level by the end of this year, around that level, then that will feel quite good for a lot of people. And there's a good chance it may even go below that if we start to see some slower growth numbers in the UK.